it's recording, that you can see. So then CRA-I is this convening organization that brings industry to the table with computing research community that we engage with. And then we do this through events like this roundtable, but in particular, we have a steering committee of CRA, like a steering committee of 7 individuals, but we also have a council of 15 individuals. And one of those council members I'm delighted to introduce is Hank Korth, who's here. He is also our moderator from Lehigh University, and he will be able to launch and start the roundtable. So thank you all for joining.
Thank you, Helen. I'm really happy to be here. Appreciate all the attendees. And what I'd like to do very quickly to start, just looking at folks who signed up, it looks like there may be some experts in blockchain, others not very familiar. And so I'd just very quickly like to point out that blockchain isn't about the price of Bitcoin today, the latest nasty meme coin, etc., and so forth. Blockchain is about establishing trust between untrusting parties. So I go buy a cup of coffee with a credit card. That transaction is based on trust mediated by a bank and credit card company. They get paid nicely for that. Many other things we do have intermediaries like that. Blockchain is a technology to bridge across this with efficiency, lower cost, and greater accountability. And we'll hear a good bit about that today. And the point of this panel is very much zoned in on blockchain and industry and the idea of how and when an enterprise ought to be thinking about having some kind of blockchain strategy. And we've got a set of panelists here who I think will provide some great insight into all of that. I'm going to give a quick intro to our speakers, and then when they first speak, they'll expand, fill in the things I left out. So I'll take them in alpha order. So we start with Paul Brody. Paul is Principal and Global Blockchain Leader at EY. That's the company formerly known as Ernst & Young. He's also the chair of the Enterprise Ethereum Alliance. And that should give you a very good hint of what he thinks is important in this space. He's also author of a book entitled Ethereum for Business. Next, Liz Kucka. Liz is CEO of a company called Purpose for Profit. It's an on-chain, nonprofit, private credit fund providing below-market rate loans to businesses and affordable housing. But the cool thing for this panel is that Liz has set up Purpose for Profit as an enterprise where the concept of blockchain is integrated directly into the way the whole operation of the company is structured. We'll hear more about that. Next, Mark Rakmilovich. Mark is Group VP, Product Management and Development, FinTech, Blockchain, and Transaction Management at Oracle. A mouthful of a title, but doing quite a bit of work and in the space of hyperledger-based permissioned enterprise blockchain. So another interesting view on how blockchain can be managed in the enterprise. Antonio Senatore is the CTO of the VeChain Foundation, and prior to that, Global Blockchain CTO at Deloitte. Now, VeChain is a blockchain that has a focus on sustainability and looking at supply chain in managing sustainable infrastructure, tracking inputs and outputs, and also has built an ecosystem around sustainability. And then Kevin Worth. Kevin is the founder and managing director of the Biddle Advisory. And prior to that, until like very recently, he was CEO of CoinDesk. Many of you who follow the industry have no doubt read CoinDesk articles. They are one of the premier news and event organizers in the industry. Kevin took that from a small organization to this major player in the field. So that's our panel. And then we have me, the token academic here. And so I'm a professor of computer science at Lehigh University. My long career, and I got the gray hair for it, is as a database researcher. In recent years, I've moved into the blockchain space, and I'm leading an organization we call Lehigh Blockchain, which is a quite substantial initiative in both research and education. And we're giving courses both in computer science and in business. I won't say more. Learn more about us by following Lehigh Blockchain on LinkedIn. We post tons of stuff there. Prior to all that, I led a database research department at Bell Labs. I led a research lab for Panasonic, among a whole bunch of other roles. And so as I noted here, our panelists represent a spectrum of offerings in supporting the enterprise and blockchain. And I look forward to Mark, Paul, and Antonio talking about that. We have an interesting perspective on how to not just tack on blockchain, but integrate it into your organization with Liz. And Kevin, with his broad industry perspective, I trust will be giving us some good insight on the big picture here. So with that, I'd like to toss out the first question here, and hopefully relatively brief answer, but also augment intro as needed. And why do businesses today need to give serious thought to having a blockchain strategy? And we can take this in any order, perhaps, but you know what? I'd like to start with Liz because she's actually employing blockchain in her enterprise directly. Liz, will you go ahead?
Yeah, sure. Thank you for the introduction, Hank, and thank you for inviting myself and everyone else to this talk today. So at Purpose for Profit, the reason why we use blockchain technology and we also are building out a crypto-based lending solution is for a number of reasons. So just as a kind of a quick rehash of what we do, we are raising an on-chain private credit fund for businesses building affordable and mixed income housing in the US first and foremost, and then expanding from the US. And so why is blockchain helpful there? It's providing fund transparency. So if you are an investor in the fund, you can see where our capital's flowing. You can see loans dispersed, payments received, and assets under management in real time or just in time. Instead of having to wait for a quarterly or annual report. We're a 501c3 nonprofit, so reporting accurately and being very transparent is important to us. So that's one reason why blockchain is important to Purpose for Profit. On the crypto side, we're looking at a tokenized loan-backed security option that's in development. So I'm not going to share too much about it, but the crypto side, it makes a lot of sense from our perspective because it provides more liquidity. It makes it easier for people to enter and exit their position as an investor. It makes it quite a bit faster. And then the last piece I would say, and we can go into this further, long term, we are looking to become a DAO, which might be crazy to some people here, and not Antonio.
We may need
Thanks for the thumbs up. Is to become
Liz, we may need to explain what a DAO is.
Is to become a decentralized autonomous organization. And so what that means for us, and this is not a force function, if in 5 years we're like, we're not ready, we're not just going to do it, but in 5 years, 7 years, if we can, that's what we'd like to do. And so what that means for us is we have a pretty good partner network across the country of people who've been building affordable and impact real estate for the past 20 years. Having them join as DAO members, first and foremost, is really important to us so that we're across country collaborating and working together to bring housing to market. If Purpose for Profit disappears, using the blockchain keeps that data available, keeps everything operating. It could leave the country, it could be in Mexico, it could be in Singapore, it can be wherever, right? And there's that record of everything that's happening, no matter where you are or who's, you don't need a central authority or a central party to keep it going. And so for us, having this be a collective business or a collective operation is really important to us. And in many ways, we'd like it to function as a public good.
Wonderful. Kevin, I'll go to you next for a broad perspective before we go to the more focused folks.
Sure. Thanks, Hank. Why should people have a block? Why should they have a strategy, an on-chain strategy? Well, some of us have been doing in the industry for a long time, and I joined maybe 9 years ago now. And it feels like at this moment, we're actually closer to what I would call real product market fit solutions versus a lot of, exciting noise that has been going on, of which CoinDesk chronicled it all, certainly over the time I've been into it. So when I think about the things that I personally think are pretty getting much closer to real product market fit and going, escape velocity, if you will, mainstream, I'm sure we'll spend some time today on sort of the payment industry, stable coins, which I feel like are a good, sort of like mini step to a lot of the bigger vision, like the kind of the things that Liz is talking about, right? Like for the world, a stable coin is one step towards an on-chain world, and then there's so many other things we can do, but that's a good one. And the reason I think everybody should be thinking about that is because payments kind of permeates everything, personal, business. It's kind of the lifeblood of the global economy. So if I think and when the US government passes legislation that says, here's the rules of the road for the financial system, the mainstream financial system to participate in a stablecoin ecosystem, everything, retail, business, everything is going to have to think through a strategy about an on-chain financial world. And to me, first of all, that's a much better on-ramp to a much broader use of blockchain applications than meme coins are, which a lot of people talk about. Oh, that's a cool on-ramp because people are, and it's not. But at least my opinion. But so as I think we're going to get this big catalyst around payments, it'll be kind of like when we first got on the internet because it was a browser. Like there's these big moments in technology. I think that is why everyone will start to really need to start to think about it. And then all the other ideas of blockchain applications, many, Hank, which we covered in the course, are, I think, have a better chance of coming to fruition. And so that's why I think people should be paying attention, because our financial system is about to actually find product market fit and something's going to change.
Yeah, thanks, Kevin. Just got a couple of quick comments again, trying to pay attention to those who may be new to the area of stablecoin is a type of cryptocurrency that is backed by a fiat currency, typically the US dollar, and there's action going on in DC to create regulatory rails for this, which could expand that market. So I just thought many of you already know that already. Now for the three panelists that have interesting offerings in this space, and I really think each one of them is probably an absolute top representative of their approach. I'm going to start with Mark, who will talk about his Hyperledger-based approaches in Oracle. Mark?
Sure. Thanks, Hank. Appreciate it. And just to add, to that long title in the introduction, one other thing to mention is that I'm also a Lehigh alum and proud of it. So yeah, go Lehigh.
And so is Kevin, by the way.
All right. Hey, Kevin. We at Oracle, of course, focus on using blockchain to solve challenges that our enterprise customers have, and where blockchain can add unique value capabilities. We've introduced our first offering, Oracle Blockchain Platform, as a managed cloud-based service in 2018. So it's been quite a few years now, in blockchain terms at least, that we've had a few hundred customers that have been leveraging the solution. It's built on Hyperledger Fabric, as Hank mentioned. We were early participant in the Hyperledger community, continue actively involved to this day. We're actually taking a look at incorporating Hyperledger Besu as another option for customers. But in Oracle Blockchain Platform, we have created a solution that's, first of all, easier and simpler and quicker for enterprise customers to adopt, right? Without all of the complexity of the barriers, integrating your own open source capabilities, adding all of the things that open source lacks from enterprise manageability, permissioning, security, identity management, integration, scalability, high performance, all the things that sort of, I mean, Oracle's been in the business for, many decades and knows how to deliver those types of features. We brought into the blockchain world. And so we made it easier for customers to adopt across a wide range of use cases. Oracle has customers across many vertical industries, from certainly finance and banking to healthcare, supply chain and manufacturing and logistics and retail and transportation and public sector, government customers as well, and so on. And so we had customers deploy our solution in use cases such as Everledge is a famous diamonds traceability story, right? Provenance of diamonds from mining through all of the cutting and processing and all of the organizations that touch a diamond before you actually get to buy it at the retail store. And then if after you buy it, they can still track it so that when you resell it, you have this full traceability certificate that you can bring to that. Circular, another partner of ours out of UK, using our blockchain platform for electric vehicle, started basically tracing all of the components, raw materials going into battery production, and the manufacturing steps involved, from raw ore, smelting and processing, refining, creating elements, and ultimately incorporating into batteries. And this was for Volvo Motor Cars, which has been on a tear when it comes to electric vehicles. Over, I think, 1 million cars produced with electric batteries, and then Daimler-Benz joined, Polestar, and a bunch of other companies. So a lot of electric vehicle batteries now have this passports that goes back to the original materials, even pre-manufacturing and through manufacturing, that's tracked using Oracle blockchain nodes. There's many other examples. Global Shipping Business Network tracks all of the shipments across, have about 11 members, ports and carrier maritime shipments. Some of the largest carriers around the world, about 1 in 3 containers shipped worldwide, maritime shipment, are tracked using the solutions that they've built, again, using our blockchain platform. So we kind of understand the requirements in providing strong security and privacy, at the same time scalability, and making blockchain useful in those kind of enterprises. And then more recently, we moved into digital assets. Kevin mentioned stable coins, central bank digital currencies. So we've been involved in those kind of projects around the world in making digital assets relevant and regulatable on the permission network. One of the big things about digital assets is the push by the regulators and by commercial banks, financial institutions, to offer services based on that. And, they certainly, prefer, at least if you read some of the bank financial settlements papers, using permission networks with controlled access and so on, as opposed to more anonymous-based public chains. So that's going to be, I think, an interesting frontier, how digital assets develops across both the cryptocurrency world and the more regulated side, and how different types of blockchain work together, because ultimately they need to work together for liquidity and to sort of avoid the fragmentation, the liquidity problems that fragmentation causes, and so on. All of those different types of networks have to interoperate together and create what BIS has referred to as singleness of money principles using unified ledger architectures. So I'll pause here, but.
Yeah, thanks, Mark. That was good overview. So Antonio, would you like to tell us a bit about yourself and VeChain now?
Yeah, sure. First of all, I like going back to the initial questions. Just want to link with Kevin and Liz. There's a couple of things I want to add. One is why you should have a strategy. Liz said it really well. We're tokenizing assets now, and that's going to be the expectations in the future for any industry: asset tokenization, trust, peer-to-peer payment, and cross-border payment within seconds. You got to be ready. Even if you haven't figured out an idea yet, you need to investigate the technology. I've been in the space since 2016. Okay, when I was at Deloitte, we started the blockchain lab there, and now my VeChain. So it's 9 years. Going back to Kevin, the initial phase was exploration. Right? We really didn't know what the future would look like. So there was a lot of MVP, exploration, proof of concepts, millions all over the world. A lot of money invested, to be honest, just to figure things out. I think now use cases are coming. The stablecoin is a great one that Kevin mentioned, because it's just all of a sudden you can build any type of cross-border product on top of that. But to me, what is really why you should have a strategy is because, you know, blockchain enables to disrupt the traditional business model. You're gonna build things that you weren't able to build before. Liz mentioned the DAO. It was possible to build a DAO 10 years ago. It was totally impossible. A community-driven ecosystem that lives beyond the people that have created that. And to me, the real disruption stands in the fact that you go beyond yourself. You can leverage your community of users and your community of even enterprises as partners, and that's the core of Web3 and blockchain. Everyone can bring something to the ecosystem, and the ecosystem expands beyond what you really have ever thought or you had imagined. Now, going back to us as VeChain, we are a layer one. First of all, thanks for the intro, Hank. Just want to add, I'm a computer engineer, so my approach is quite technical. I'm alumni from Politecnico di Milano, so I have a bachelor in computer engineering. I'm Italian originally. What we have been doing is VeChain was founded in 2017 as a layer one by the CIO Louis Vuitton, Sunny Lu, is my boss now, and he's the CEO of VeChain, with the idea of okay, let's you know, use blockchain technology to solve real world business problems. Sunny, in his role at Louis Vuitton, his main issue was counterfeiting, track and trace, supply chain, and he really saw the possibility of using blockchain technology to create what we call to tackle supply chain with the use of product passport and track and trace. So VeChain was born with that in mind as a low-hanging fruit. That's why we were associated with supply chain for years. But de facto, we are an open EVM. You can build anything on VeChain. We are, you know, it's just open out there. What we did though is that, you know, at the very early stage of the blockchain space, crypto space, enterprises were really reluctant of going into public chains for several reasons. Some were technical, some were of compliance. And we added a few features to make enterprises adopt layer one very, very quickly. Something like fee delegation. An enterprise doesn't have to hold crypto. You can pay, you can submit a transaction, and somebody else, some authority will sponsor that transaction, and you can reconcile in cash, in fiat afterwards. There's still a bit of reluctancy from enterprises to hold crypto in their balance sheet for several reasons: security, reputation, fluctuation, etc. We use the two double token mechanism as well. One to pay for the gas, one for the investment, for peer-to-peer payment, for a smart money. And we use that for we separated the two so that transaction fee won't be affected by price fluctuation, by speculation. This is still a problem around, not as big as it used to be, but still an issue. You know, multi-party transaction that, you know, we added the ability to create basically workflow within layer one blockchain, which was impossible before. So we went with this in mind. Let's make sure, let's do something where we can track valuable transactions that are real. They're not wash tradings, they're not meme coins. Although we have meme coins on VeChain, don't get me wrong. People have developed crazy coins on VeChain, but that's been our main purpose. So we were reaching 1 million, 2 million transactions per day at times, etc. Then our focus shift to sustainability, which supply chain is part of sustainability, but quickly we went straight to user. We tried to change the narrative from regulation to action. As I said, the Web3 user is about user being engaged with you, being a business partner. It's agency, and agency comes from Latin, you know, agite, to do something, to do things. There's the conclave today, so you may hear a lot of Latin going on. on TV. So that's one. So Web3 is action. And so we developed a DAO, which is basically a marketplace of sustainability app that reward users for sustainable action using a token that we created. And it's gone out there with use cases like you can buy a fractional ownership of a solar panel and you get rewarded. You charge your Tesla car and you get rewarded. Basically, people with Tesla cars in the VeChain ecosystem pay in full for their Tesla charge using EV Earn. You get coffee with reusable mugs. You get rewarded. You clean up your areas. It's very popular. Cleanify all over the Middle East. People are, and Japan and Southeast Asia, people are cleaning the areas. There is about 10,000 users per day and get rewarded. So there are cleaning campaigns altogether. So it's a marketplace at the moment of 35 apps, circa, trying to get to 100 by the next few months. But that shows, again, what has VeChain tried to do. From enterprises, real use cases, to then user, directly involvement with the user, but then still with enterprises, because some of the apps in the VBetterDAO are enterprises. That's 5 minutes of what we have been doing in the past few years.
Great, thanks, Antonio. So now you've heard a couple of approaches, and now for one that is quite different. And Paul, it's all yours.
Sure, thank you very much. So let's go. I want to start maybe with the original question, which is like, what's the reason for having a blockchain strategy for your business? And from my point of view, it's actually relatively simple. All B2B commerce is going on chain sooner or later. And it boils down to something relatively simple. Every business agreement on Earth consists of three things: money, which is being exchanged for stuff under the terms of some kind of an agreement. Now, on chain, I can take the money and turn it into a digital token. I can take the stuff, I can turn it into a digital token. Those are all defined by smart contracts. And I can define the exchange, the rules of that exchange, right? The things that go into corporate business agreements and purchasing agreements as a smart contract as well. So for the first time ever, we have this infrastructure in which we can have all the pieces of a business transaction running in the same environment, reconciling and executing automatically, right? Provided we have the inputs. So basically, everything is going on chain, right? And once it goes on chain, you will be able to do it a couple of orders of magnitude faster and cheaper. And I'll give you a very specific real world example. EY took all of the contracts in the Microsoft Xbox video game network, all the procurement contracts that Microsoft has, several thousand of them, and we turned them from traditional paper contracts with like an ERP based assessment each month to a blockchain-based smart contract. In doing so, we took the cycle time for calculating royalty payments each month from 45 days to 4 minutes. And we cut the operating cost of the whole process in half, right? Now, do that to every business agreement, right? Cut the cost of every payment by 80 or 90%, which is about what you can do when you move a payment from a traditional wire transfer rails to, say, a blockchain like a US dollar stablecoin payment that's executed on chain. And you start to get this recipe for really streamlining that portion of enterprise business, which is SG&A. That's a starting point. On top of that, over time, eventually what starts to happen is as you componentize your business into smart contracts and business tokens, it becomes easier to kind of rearrange the chess pieces inside of your business organization. And it will lead to, I think, over time, people redefining the way they run their businesses. So if the entire world is going to move in that direction, I think you pretty much have to have a strategy in that space. There are very specific industries that are going to be quite substantially upended. Probably the first is payments, right? Kevin talked about this at the beginning. Stablecoins are a big deal. To date, consumers have been big adopters, right? It's a cheaper way to move money across borders if you're a migrant worker or you're studying in a foreign country. We're at the beginning of a massive stablecoin adoption cycle in the enterprise space as well. And I'll just give you a sort of a little example. Last year, EY became the first company to receive a B2B stablecoin payment in a fully automated way. And we did that. We received a payment from PayPal. They paid an invoice from EY. We did some work. They sent that money as cash through their ERP system from their wallet to our Coinbase institutional account. And at our Coinbase institutional account, we had a full data integration from our SAP instance to Coinbase. That money showed up as cash paid against PayPal's invoice. So all of a sudden, we can do a fully automated payment on blockchain rails as easily as we did a traditional ACH or wire transfer. And that is kind of really transformational in terms of automation and cost. We calculated if we could move all of our payments into this mode, which we can't for lots of complex regulatory reasons. But if we could, we would save about $100 million a year. That's nothing to sneeze at. So in general, like the scale of this transformation is very large. In terms of what EY is doing, we have a somewhat distinctive approach, which I think has made us, it's hard to tell, are we the largest in this space or not, in terms of like the big system integrators, but our particular focus is a couple of things that are unique. Number one, we're specifically focused on public blockchains, right? I think kind of foundational to our worldview is this idea that a centrally managed decentralized ledger is pointless, right? The whole value proposition of public blockchains, the whole value proposition of a blockchain is that you can have something that is decentralized and not controlled by any one entity. So permission chains have no value proposition. They're basically a very expensive way to do something that you could have just done with a web server or a database. Secondly, we are very strategic about our investment. We've decided we're really only going to invest in the Ethereum ecosystem. That's not because I'm not going to give you a treatise of why Ethereum is better. I think it's got some incredibly good features about it, but fundamentally the technology industry is one that's driven by standards. The best technology never wins. There's always something better out there, but Ethereum is by far the largest. And so if you're sort of building a business very strategically and you want to transact with other business partners, you're going to build on the biggest network. That is what we have done. And you know, I can give you chapter and verse, well, lots of chapters, because I wrote my book mostly about all the individual use cases, supply chain payments, insurance, cross-border trade, right? Basically, it's a very, you know, there are lots of nuances to each individual piece, but the bottom line is money for stuff under the terms of an agreement, that covers everything, and eventually it's all going on chain.
Hey, thanks, Paul. So before I ask the next question, just to kind of digest all the neat things we've heard here, listening to all of our panelists, I trust you've gotten a sense of the wide range of things that you can do within an enterprise, whatever your enterprise happens to be. And also reading between the lines. I know there are some academics in the audience, and you know, there's great stuff out there, but the full story isn't yet written. There's a lot happening, a lot of room for research, advanced development, so lots of excitement there. What I'd like to do, since we took a little longer on this first question than I had in mind, is to dive in to a deeper question that's very much largely aimed at Mark, Paul, and Antonio, and that is to, expanding on what you said, give us a sense of why you think your particular take on blockchain and industry is the right one. Now, Paul, I know you already made a slight comment in that regard, and so I'm going to hand it over first to Mark so he has a chance to answer.
All right, thanks, Hank. I promise not to take over the rest of the time that we have, because I probably could, but I'll keep it short, a few minutes. So I think there is certainly place for both public chains. They provide a lot of value, a lot of utility, and permission chains as well. But I would certainly disagree with one point that Paul made, that permission necessarily means centralized. Many of our customers deploy blockchain in decentralized environment in a consortium setting with multiple organizations participating in the control. There are some deployments of permission chains that have been used in a very centralized manner. Some of them did not last very long. You probably have heard, many of you, about TradeLens, which was the networks that IBM and Maersk set up for logistics and shipping. That's no longer with us. After a few years, there was a lot of centralization there, and many other participants felt like, they wouldn't necessarily be able to get the benefits that they felt were important. There have been networks that were set up, for food traceability, where some of the larger, supermarket chains, I think it was Walmart, was in a controlling kind of a role, and a number of other members have shared it. But, on the other hand, we have experiences with networks set up like global business shipping network, which is operated by a joint venture. Every participant has a seat on the board. They jointly decide how to operate it. They specifically made sure that they're going to implement very decentralized governance model and best practices, how they run this. And this is very successful network, hundreds of millions of transactions, 1 in 3 shipments worldwide, maritime shipments, containers, etc. So there are ways of approaching permission networks with a right governance model that promotes decentralization, which I think is very important. I do agree with Paul. If you don't have decentralization, even to some extent, might as well use a database. I mean, Oracle database has wonderful things that invite you to take a look at it. But if you want decentralization and you want multiple organizations in logistics, supply chain, financial services to be able to benefit from that, I think permission blockchain certainly have a role to play. You've seen that in the financial services, when banks start thinking about regulated financial world, bank financial settlements and others have certainly called out a number of concerns with public chains. They do also operate with high degree of concentration, mining concentrations being a forever risk, because some countries support financially and otherwise the mining aspect of whether it's Ethereum or Bitcoin or others. There is strong concentration and they could have significant influence. There are risks associated with anonymous participation. It's very difficult to enforce the kind of anti-money laundering and KYC, know your customer requirements in financial services when you have anonymous participants on chain. Banks really need to be able to know who they're doing business with. And ultimately, we're talking about the kind of transactions that drive business, whether it's supply chain or regulatory requirements. You're going to need to satisfy, if you're running a business, your legal department. And your legal department needs somebody to be able to take action against if things go wrong as a last resort, right? So anonymous participation really makes lawyers very unhappy and makes it very difficult, I think, for businesses, whether it's right technically or not is a separate argument, I think, but for operational reasons, business reasons, etc., to leverage public chains for non-consumer facing applications, right, B2B applications. And this is where I think permission chains can provide a lot of value. You have guaranteed performance, thousands of transactions per second we've been delivering. You have identity management tied to not only member organizations, but the individual participants that are registered with enrollments, and ability to provide confidentiality and access control. The fact that you have some transactions happening on the blockchain does not mean that everybody who is a member, even of a permission blockchain, needs to be able to see how Bank A is doing transactions with Bank B or how much is just transferred. Business confidentiality is still an important factor, and privacy. There was a report published very recently by Central Bank of Brazil on the CBDC experiment. Central bank digital currencies have been running for the last few years, called DREX. They have 16 banks participating, a number of other institutions in the central bank, and it was done on Hyperledger Besu nodes running in an Ethereum kind of a framework. And one of the concerns mentioned in there is that despite the number of attempts, and they've tried to actually apply a number of privacy technologies, they were not able to solve the issue of confidentiality between the banks when they're doing transactions, right? They want everybody to be able to verify and validate those transactions as validator nodes, but they don't want Bank C, who is not in the middle of Bank A and Bank B transaction, to know that one bank just spent $10 million paying something to another bank. Those kind of challenges is what's going to, I think, make permission blockchains a factor. Maybe there will be solutions in the future on public chains, but today, we're not talking about aspirational use cases. We have been running since 2018 with a few hundred customers and then production, and whether it's traceability for electric vehicle batteries and the passports, or a number of things in supply chain, logistics, manufacturing, retail space. Some of the traceability requirements in pharmaceutical industry, right, that have been imposed by FDA in recent years, or food, Food Safety Modernization Act. That's another FDA regulatory requirement, and that requires food processors to have information about some of the upstream suppliers, downstream distributors, and the number of events that are important from food safety perspective, from harvesting to processing, packaging, transportation, et cetera, et cetera. And so those are the kinds of use cases, I think, where permission blockchain can provide significant value here, now, today.
Great, thanks, Mark. Before I move on to another panelist, there's something I just want to toss in here. So we're talking about issues of privacy, which Paul talked about. Mark certainly has. Not to get too deep in the technical weeds, but there's a very interesting cryptographic technology that all our panelists are well aware of that I think bears mentioning here, and that's a thing called zero knowledge, where I prove to you I know something without telling you anything about the thing I know, except for the fact I know it. And where this relates to, be it finance, supply chain, or whatever else, is the idea that I can represent certain rules, regulations, whatever, in code, and then prove that I know a secret, my transactions, that comply with those regulations. And then I can publish that proof in a public way that everybody can verify easily. I'm oversimplifying a bit, but this kind of technology, which can be employed both in a permissioned and in a public space, provides a great way to do bridging. And I know, the folks here are using this in a variety of ways. And I know EY has a couple of products relating to that space that Paul didn't mention, but I'm sure he will. But if you don't mind, Paul, before I give you the floor for that, Antonio, I'd like you to talk a bit about VeChain's role in this space. And I mean, you are a layer one, as is Ethereum, but using proof of authority, you have a somewhat more controlled space in certain ways. If you can talk about, where this fits in the spectrum and why enterprises might think about these various points. And I'll let you go from there. I'm not hearing you. You're on mute.
Sorry, Hank. It's an interesting one. I was listening to the conversation between Paul and Mark there. The debate, the public permission has been going on for years now. I usually answer to this one with a brilliant statement that a colleague made once. It's like, it used to say permissioned ledger are evolutionary in terms of what you can do. You bring current models to better efficiency and to achieve savings and to reach other areas that you couldn't do before. Public ledgers are really revolutionary. Things you can do go beyond. You can create business models effectively that you've never seen before. DAO themselves, as I said before, that are things that have never been seen before. Although there's no reason, I don't think nowadays there is nothing that the permissioned network do that public network cannot do, or there is very little. So the debate is open. In our case, we started with 101 authorities. Wow, why? Because back in the days, we're talking about almost 10 years ago, enterprises we were working on were worried about governance, and they wanted to know who were the authorities governing the network, effectively this one. And they wanted to know that the authorities running the nodes that are the blockchain. Blockchain is a network of nodes that reach a consensus, and someone is running them. And they wanted to know that these were people and organizations that were KYC'd and approved by a steering committee. That is us. So we use that approach to build the trust, and it's true. In our white paper, we called it in 2017, I think, an in the middle approach to say, all right, we'll get 101 validators as a number that makes sense. And we're gonna get them KYC'd, and we know that the network is run by them. And there is a steering committee which is elected by the community. I'm an elected steering committee that approves and removes validators or not. However, Hank, now this thing is changing also for VeChain. As you know, there's MiCA regulation in Europe that VeChain is operating in Europe now, and that requires you to have a degree of more decentralization. But decentralization is has two aspects. One is technical. One is how many nodes you can have that help you run the network. At VChain, we continue staying to 101. We may open to more in the future, but we are removing the KYC and the steering committee. So we are going to allow anyone to enter because that's what the regulation actually wants now. Is everyone should be able to participate to the network freely. I suggest everyone to read the MiCA regulation in Europe. It's quite an interesting attempt to regulate both those who manage asset and issue asset and public networks, and there's other stuff in that. So we are changing that as well. But as I said, one decentralization aspect is the number of nodes, is the network, but the other decentralization aspect is the power of making decisions within the network. Is the vote. So VChain will continue, allowing people to vote for any hard fork. Any hard fork of VChain goes through a voting system. We have defined a new system of validator and delegator. So we are moving from proof of authority, which is a very simple consensus mechanism, to delegated proof of stake that will allow the community to vote, basically, and to decide what are the things that what are the hard fork and the future developments that we need to do. So yes, I hope I clarified a little bit our approach and how it evolved over the years, and my take on the difficult question of public versus permission.
Yeah, thanks, Antonio. I'm going to go a little bit off script here because it turns out that Paul has to catch a flight. And so my apologies to Kevin and Liz. I'm going to circle back to Paul so he can reply to some of Mark's comments, and then we'll let everybody else come in.
Yeah, so thank you very much for doing that, and apologies everybody. I'm at Newark Airport, and shockingly, my flight is on time. So we're gonna. I know it's kind of exciting.
The only one, yeah.
But this question of like public versus private is actually, we are seeing a replay of something that actually happens over and over again in the technology industry, where public permissionless networks, the internet being the best example, seem scary, unregulated, full of bad actors. And a lot of the things that you hear people say, like, oh, we don't want to do this on a public network, are a little bit sort of the repeat of some of the conversations. And Antonio actually highlighted something really important. Over the years, the regulators have just come to accept that permissionless networks are vastly more successful with the users. A really good example is, stablecoin payments, right? We are doing several $1 trillion of stablecoin payments, I think a week now, on the public Ethereum ecosystem. The Bank of International Settlements, which sort of is overseeing like the global kind of enterprise and government sort of approach, is just ramping up their first trial of cross-border payments, right? The reality is that the public networks with the open innovation systems have just raced ahead of the private networks, and MiCA and other legislative things that are going on, like the Stable Genius Act in the US, they're a reflection of the fact that lawmakers and regulators know where the action is going to be. It's moved to the public networks. What we get to then is this question of, okay, what are public networks missing? And one of the things that Mark talked about is privacy. Privacy is foundational. If you're an enterprise, you are not going to transact on a public network without privacy. No big company is going to tell their competition in the clear, what are we buying, where is it going, and how much are we paying for it? And so our big focus over the last 8 years at EY has been to build privacy technology on this technology that Hank was mentioning, which is zero knowledge technology. We're actually now in our 4th generation of privacy technology. We built a solution called Nightfall, which is a zero knowledge payment system that we are in the process of deploying on public Ethereum. And we also built an application called Starlight, which is a sort of a custom tool that lets you build complex business logic. And in both of these cases, we see governments and regulators actually looking at these. Brazil is a very interesting example. They actually have strict banking secrecy laws, and so they've been testing out Starlight as a privacy tool in what they are thinking about as potentially a national EVM-compatible permissioned network. Now, I really am trying to steer them to turning into a public permissionless national network, but I'm always happy to see people advancing the cause of privacy, because I think it's really essential to really every sophisticated business use case depends on some kind of underlying privacy capabilities to make it work. And permission chains can they can do some special things that public chains can't. It's a little bit like the internet. The internet was not designed for video conferencing. We figured out how to make it work anyway. And we are going to see kind of the same process go on public Ethereum, where all of the regulatory compliance, privacy, and other things, they're going to get molded on. It's not going to be perfect. That's kind of the nature of the technology industry and standards. We don't end up picking the ideal technologies. We tend to go with the ones that have wide adoption, even if they have shortcomings. And then we band-aid and duct tape our way until they kind of meet all the requirements. So you will not get me to defend Ethereum as some kind of perfect outcome. What I would say is it's the one that people are using. Therefore, it's the one that we need to go with.
I would say, if I can maybe just briefly say, I think there is a ton of people using Ethereum, but mostly in the individual capacity, not so much as operating, businesses, particularly large enterprises. I think
I would beg to differ as somebody who runs the blockchain business at EY.
All right.
I'm so sorry I have to leave. I'm going to continue to listen in, but I'm actually going to have to go and catch my surprisingly on-time flight. I am so appreciative of the opportunity to come and join this. And Hank knows how to get in touch with me for people who would like a follow-up question or just want to send me angry messages about my takes on public blockchains.
All right, thank you very much, Paul. It's safe travels.
Thank you.
Okay. Yeah, we need to circle back to Liz and Kevin. Just a couple of things. We were talking here about issues of efficiency, how the internet scaled, and so forth. And if I can take a quick tech detour here, it's there was a question. I think it was Mark Hill who posted it about the issue of scalability, and one of the really interesting things happening in the blockchain space now is a concept called layer 2 chains, which, to say very simply, is something on top of a layer 1 chain like Ethereum or VeChain, where transactions are aggregated, costs amortized, and the result is that you can get higher throughput and lower cost. So, there's limits to what you can do in just purely a layer 1 system, but the things on top then make it quicker. Just like we have figured out how to do, video on the internet, seems like we're doing it right now. And, the EY solution is a layer 2 on top of Ethereum. There are hundreds of others. I can't possibly enumerate them all, but that's one of the areas where scaling comes in. I'm sure Mark will point out that in his ecosystem, you get the scaling of the underlying cloud infrastructure. But what I'd like to do is get Liz and Kevin to react to this debate. Liz, would you like to make a few comments on things you've heard and other insights?
Is this in response to public-private, or is this in response to scalability?
Yes. You can go whatever direction you like. We've heard a lot here.
I've been eating popcorn in the background, enjoying myself. Sorry. Yeah.
Hopefully it can help the audience and people who may not have been as familiar with all the details that were coming out to make sense of all the things we've talked about.
Sure. So on the scalability side, and I would leave it to Antonio or someone more technical to add more color to how I understand how things work on L2s or having on-chain or off-chain transactions is, for one, batching transactions is one way to kind of lower throughput. You don't have to have every single transaction be individually batched. And then also, does everything really need to be on-chain? Everything doesn't have to be on-chain. And so in some ways you could argue that is that therefore a private solution. But again, I'll leave Antonio to answer that one. I think when it comes to scalability, not just on throughput, but on adoption, where I think that's going to come from, and I think it's quite a ways from now, is it's going to require like court systems and legal systems really adopting blockchain, right? Because if that doesn't happen, we're going to continue to have these like these legacy systems that don't communicate with each other, and it's going to be difficult to have a source of truth and verify records, essentially. So in the world where I sit, we're a lender within the affordable housing space. Could liens be on chain? Yes, they could. Could defaults be on chain? Yes, they could. Like all of these records could be on chain. Could a court system use an API that calls that record to be able to enforce who's the first lien holder versus the mezz debt holder, right? And like that should all be doable, but it's not really possible today unless we have that source of truth that everyone can interact with. And so I think from my perspective, when it comes to scalability, I'm not even thinking so much about the throughput side, but I'm thinking more just about the adoption across like all of the participants. Everyone really needs to be participating in order for it to work. And if we keep having all of these different chains, I think are great for a number of reasons. That's a very different topic when it comes to community building and having aligned interest and incentives, but having bridges that help with communication across those different chains. So hopefully that's helpful or adding a little bit of color.
Yeah, thanks, Liz. And I think, pulling together a number of things we've heard, we can see that a key player in the whole business of blockchain generally, be it finance and stablecoins or being in the enterprise, is the regulatory environment. And Antonio mentioned some of the regulatory actions going on in Europe, and Paul mentioned some in the US. This is now developing and developing in an accelerating way where it looks like we're starting to see regulators appreciating the value of the technology and not trying to run from it, but to put down appropriate guardrails to reduce litigation risk and enforcement risk, and thus make it possible for some, I think, very interesting adoption along these lines. And Kevin, since you haven't spoken for a while, maybe you can react to some of that in terms of the broader environment and the balancing of privacy against other concerns.
Yeah, thank you. So I don't think most people will realize we're almost at a tipping point, but not yet, that how important privacy is, right? I don't think most people, although I think the narrative is changing quite a bit, realize that our entire digital lives, our footprints, our social, our graphs, are owned by other people, by big tech companies. And that was cool when we first got all these great services and we gave up data. But there's going to reach a tipping point, if we haven't already, where real world outcomes change. So privacy, I think, will, as a theoretical, philosophical issue, that obviously there's a really good technology in this trust layer called zero knowledge proofs. That's technical, but I think privacy as a conversation in democracy is only going to grow, and obviously blockchain systems have some good answers for that. The scalability question is a great one, especially as if I go back to my point where I think we're going to hit escape velocity on the first mainstream crypto product market fit, i.e. stablecoins. The volumes are growing tremendously, right? Like we're in the trillions already in stablecoin volume. So, there's and the layer twos are a very good solution, as Hank mentioned, Liz mentioned, roll-ups, sharding. There's lots of technical ways to increase scalability. But it's always the designers, I think, there's always a bit of a tension between scalability, but also keeping decentralization and security, sometimes known as the trilemma, because we like lots of jargon in our industry. Right, like the more you try to solve for scalability, you get centralized entities. Because they're really efficient at solving scalability. But the problem is you get centralized entities, you get all the downside of having centralization. So the technology is really moved quite a bit to solve a lot of these issues. Now we're going to get the technology that's caught up. We're going to get regulatory approval around a very specific use case that everyone can get comfortable with, i.e. stablecoins. By the way, just for everyone, because we don't know what a stablecoin is, when you hold a dollar bill, in my mind, that's a stable coin. It's a token. It doesn't, you can't do anything with it, but it's a claim on something else. It used to be a claim on gold back in the day, right? For many, many years. Now it's a claim on a promise, full faith and credit. So, it was hard to move gold around. So we issued this paper, and then that was easier. So now it's so much easier to move the Venmo generation. It's so much easier to move tokens around versus massive amounts of paper. So this is why it's going to have a mass adoption, because everyone's going to intuitively in society understand it, unlike Bitcoin, which, is harder for people to understand on a mass scale because it has been many things over the past 15 years. So we're going to get to Hank's question, we're going to get legislation that is at the 1 yard line. Hopefully it doesn't get fumbled. Yesterday was not a good day, but hopefully we don't get, it doesn't get fumbled. The technology is improving. I think the awareness of the attributes of decentralization versus the power of centralization is also growing. So you've got a really good, we're 15 years into this now. You have a really good velocity of things overlapping where blockchain technology applications may go from a niche thing into the mainstream. And then we can get to a lot of the other, over the years to come. I love what Liz is doing. I mean, affordable housing is a massive problem. Can we solve that? We can't solve that through, legislation. Has never worked. I mean, I know they try, but it doesn't really solve it. Can we solve it through technology, new technology? That's an awesome, so these are the kinds of projects that will continue to evolve, especially once we have regulatory clarity.
Thanks, Kevin. I'm going to take a quick logistics interrupt that as we are winding closer to the end here, I'd like to tell the attendees, we do have the Q&A system set up, and I'd appreciate if you've got questions, you start putting them in. We'll all have a few words here. We'll start looking at the questions, and probably in a few minutes, assuming we get a nice list, start focusing on addressing some of those. So while questions are being typed in, I'll if somebody has a immediate comment to throw in on the panel, just jump in. Otherwise, I will ask more questions. I can't believe everybody will be silent after what we saw earlier, but otherwise, we've talked a lot about the current environment. We've talked about business applications. What I'll toss out then is a question of where do we need technological advance? We've talked about regulatory advance, and doing that with a partial thought to those of the attendees here who are more academically oriented, looking for how to apply their research agenda in this space. So where do we need to push the technology? And anybody want to take that first, or I'll call on somebody?
I'm happy to talk a little.
Okay, we got two takers, so in turn, either one of you.
I'll be quick, Mark. Just 1 second. One thing, it's we spoke about the layer 2 and layer 2s themselves are actually networks of layers themselves. You can participate in super chains there and bridges, etc. We are all talking about infrastructure, and we are in academic space, and I understand that. But in an academic space, we also study sometimes the UI UX and how the user interact with everything. I think the technology needs to advance also in its approach to the user itself. Things like account abstractions that allow users to use social login to create wallets, to interact with blockchain environments, with digital asset. It's a different thing. There's a lot of it. There's been for a while, Hank, some let me call it a school of thought, that philosopher that were saying, blockchain is like a black box. And it's like the internet. It's black, and people will continue to use apps, and at some point they will not know that they're using blockchain. It's true, but it's also not true, because when you live in a world where assets are digitized, you see them. Your user experience changes totally. You start seeing tokens. You start seeing digitally things that you want to monetize, and so your user experience is different. So the crypto space right now and the blockchain space, to me, needs to focus a little bit to make the user life easier, or at least to enable enterprises to make their user life easier. One great advantage is account abstraction. Our vBetterDAO, it's all account abstraction. Every app, you log in with your Google, you create a wallet. You don't know where your wallet is. You get your tokens, and you throw on ramp into a debit card, and you can spend immediately the money you made by, I don't know, charging your Tesla or doing whatever. So one technology advance, because everyone is going to talk about infrastructure. I want to say something a little bit different. Let's talk more about user enablement, things like account abstraction. That area still needs to develop. Account abstraction also offers other nice things like fee delegation. One of the things you find when you start dealing with the users, they're going to start saying, how do I pay the transaction fees using this thing? With account abstraction, that becomes totally, there are ways to make it fully transparent. There's a lot into the user experience where the tech can help, needs to improve. It's already improving, and so for the academics here, for the students, looking at account abstraction could be a very interesting research to do. Okay.
Okay. So Mark and I had a few things to say. We're getting some excellent questions. So if you could be brief, I'd
Sure.
like to have time to pick these questions up.
Yeah, absolutely. So I'll echo what Antonio's saying in terms of making it easier to use. One of the reasons that we have decided to provide blockchain as a service is because we provided built-in a lot of abstraction to companies, to business users who want to deploy, to IT people who don't have PhD in blockchain, but they still want to leverage the benefits. So making it easier to manage, operate, integrate applications, all of the API work, right? Many existing applications today are not going to get replaced. They're going to get extended with the capabilities of the blockchain. Think about, the sort of revolution at enterprises when they introduced the ERP systems, right? Enterprise resource planning, years and decades ago, and they basically automated a lot of processing within the company. And now with the blockchain, they can extend it to the ecosystems. They can create ERP-like benefits across an entire supply chain, right? And all of the participants in that ecosystem, or distribution down, maybe for food producers or any other kind of logistic ecosystems that companies operate in, right? Very few companies run standalone today. They all have vendors, partners, insurance, regulators, financial, bankers, etc. And having the ability to have trusted transactions on a mutable base with confidentiality and scalability to make the ecosystem operations and transactions easier, faster, more secure, etc., I think going to be important. So I would say privacy and confidentiality, there is still a lot to be learned how to do it and do it at scale. I mean, a lot of things we've heard about earlier still sound to me very aspirational, right? We need a little bit more. We're almost on the cusp, in a few years, 5 years, etc. But in fact, people have been using since, the last 5-10 years, a lot of these technologies. And so we need to think about how to make it practical, and not just consumers, but for businesses to be able to leverage this and integrate it, just like the leverage applications running on top of database without giving it a second thought. I mean, who knows? There is a database underneath pretty much every single application you're on. It's hidden, it's embedded technology, it's doing what it's supposed to do, and it's delivering its value. but the applications themselves are abstracting a lot of that. And so blockchains are going to be similar, I think, more and more buried and embedded in various applications. You're going to maybe see the benefits of it, but you're not going to necessarily have to deal directly. Even with things like tokens, you look at banks offering deposit tokens or tokenized deposits. It's like stable coins in an enterprise payments environment. But people in a corporate treasury office who are issuing a B2B payment are not going to know much about the token and what to do with it. They'll just process a payment and they'll be done. So abstraction is going to be important at all levels, whether it's operations of the systems and infrastructure or operation of the tokens and everything to do with that.
Great, thanks, Mark. I'd like to turn to some of the questions. As I look at them, I think a number of them are ones sort of aimed at me. So I will do my best on those, go back to the panel as needed. And I'm going to start with the question of how can you provide permission on a public blockchain to control assets? And that's actually a long answer, but really the short answer is something I talked about a moment ago, the concept of zero knowledge proofs, where I can prove a fact without actually revealing the underlying information that went into it. The cryptographic mathematics there is quite the complication, to put it mildly, but basically I can make a commitment to a data set while keeping the data set private. I can prove membership of something in that data set without revealing anything about the rest of that data set. There's a rich set of mathematics around this that kind of leads to another question we have here, which is there a need to explore cryptography by novices within blockchain for ZK proofs and privacy, scalability use cases? And what are ways to get a good start on that? Well, I mean, this gives me a chance to advertise my classes here at Lehigh. I said we have quite a set of classes on this. I'll be teaching in the fall a computer science focused blockchain class that covers zero knowledge cryptography and consensus algorithms. And we also do a policy focused class that I just finished, and everybody on this panel here actually participated in that class. So thanks once again for that. But ZK is a generally complicated thing, but there is a very nice video. I won't grab the reference right here now that tries to introduce ZK for a child, an undergraduate, and a grad student that does a very nice job of it. And that may be enough for you to search for that. And this leads to another question of why are colleges not promoting blockchain or crypto in the classroom and AI is getting all the attention? Well, I'm not sure what the whys are in that, but here at Lehigh, I can, as I mentioned at the beginning, we have a fairly substantial enterprise of research and classes. You can find us on LinkedIn as Lehigh Blockchain, or on the web, it is blockchain.cse, as in computer science and engineering, .lehigh.edu. We're doing quite a bit there. And I know that a lot of colleges aren't, because companies are very much going after our students. In a very bad tech market, we have perfect placement record, which is and some really nice jobs. I won't name any here, but we're quite happy about that. And
well, Frank, I can actually maybe attest to that. You guys really doing a great program. We actually hired, I don't think anything to hide here, but actually hired one student a year ago from Lehigh, from Hank's program, and 3 more this year at Oracle. So it's been great.
So that one guy must have done a decent job, right?
Yeah, very good job.
But no, I think part of the issue, AI has been around a very long time. And all those folks who survived the AI winter, it's blossoming now and it's magnificent. The work in blockchain has been more out of academia. Some of the leaders in the industry are folks who dropped out of college because they weren't learning anything useful, in their opinion. and now have turned out to have major impact. So it's a very different kind of ecosystem in a whole bunch of ways, and something that in the work I'm doing, we're trying in our own way to change that. And I would welcome to take more discussion of that offline. And I haven't forgotten the first question. I'll be popping up to that. For the last one, is the government funding blockchain research? I hesitate to answer with the world's expert as one of the attendees here from the Computing Research Association, but Peter, I'm going to give it a try anyway. And I think part of the issue with government funding going back has been the ambiguity in government toward blockchain. We've had an era of what some referred to as enforcement with no rules, which created a huge risk in the industry that permeated a lot of thought in government. We are now moving to what some are calling rules with no enforcement. That may be a bit of an exaggeration, but as we start to get better guidelines and blockchain technology becomes an avenue where the world's economies are going to compete in finance, supply chain, and elsewhere, I think once the current downturn in government research support eventually changes, and these things have to come back, I mean, they better, that we're going to see quite an emphasis then on blockchain research. And I'm certainly looking forward to that. Now, for the question,
Can I just,
yeah, go ahead, Mark.
Can I just mention that just literally within the last few weeks, I think, there is some new legislation in Congress where I believe it's called, Promoting American Blockchains Bill or something. And it's a legislation not yet, fully approved, but asking basically Commerce Department to lead U.S. adoption and use of blockchain across government. So there is actual, certainly, the political wood behind the arrow kind of thing that's helping to accelerate this. And, if this passes and Commerce Department, starts focusing broadly on leveraging it across a variety of government agencies, I think there's going to be a, blockchain summer and then some.
Sure. And I'd like to now pick up, the last question, which was, what is the panel seeing regarding client adaptation of, quote, blockchain as a service platforms? Or is there a bias doing it in-house so IT can better understand the technology? And I think Mark's going to have some good comments here, but to start, one of the points about any kind of blockchain system is that you are getting trust by deferring to a larger crowd. And this means that you have to have an ecosystem. It can be an ecosystem of your supply chain. It can be the Ethereum ecosystem. It can be the VeChain ecosystem or any other. And so it's not a purely in-house thing. And booting up a blockchain that is actually public is quite a challenge. There's a startup issue there in that an initial small chain can easily be taken over in any kind of public system. But between pure public and in-house would be the kind of thing that is represented by permission technology. And so that's where I think, Mark, you probably have a couple of comments to add, and maybe Antonio.
Yeah, no, absolutely. I mean, we have seen, I would say, since we initially offered our blockchain as a service in the cloud offering in Oracle, and then created an on-premises deployment, which is Kubernetes container-based. You could run it in other clouds, you can run it on premises. And I would say that probably 85% of our customer base is using our blockchain as a service in Oracle Cloud. Now, that doesn't mean that, Oracle is, operating, one central blockchain node. No, what it means is that all of the participants in a particular ecosystem or consortium have Oracle blockchain instances that we're providing as a managed service, as a platform as a service, basically operating, connected together into network. They still retain access and control, and they have ultimate authority. We provide infrastructure management, like any cloud vendor would, right? We take care of updates and patching and monitoring and, et cetera, upgrades, version to version and all of that stuff. So we kind of take the IT complications, the drudgery, some of the complexity to retain the validity of the ledger as you upgrade to new versions, which may be slightly incompatible. We take care of a lot of that and hide that complexity. But the actual organizations that own the nodes still have administrative authority to come in, but they don't need to know all of the bits and bytes underneath. They can just operate it through the APIs and interfaces we provide, and that's much simpler than building it in-house. But there are organizations that need it on premises. We've done projects with government agencies, DoD, certain countries where we don't have cloud regions. I think we're in about 50 cloud regions around the world, but there are countries that want to have data residency locally within the country for their blockchain node, even as it connects and shares the data with others. But, the local government regulations require them to have a local copy of it sitting in their country somewhere. So I think we see a hybrid world out there, right? A blockchain node could be managed, could be customer managed, could be vendor managed. As long as they all connect and work together properly and follow the consensus algorithms and all of that, I think that still works.
Great. We have a couple more questions and we need to wrap in respect for everybody's time. A couple of questions have shown up about various skills to learn and so on. Can't really go into depth here, but there's really two dimensions of things for people trying to get into this. There are some very fundamental concepts in cryptography and in consensus that underlie the system and give you a sense of how we can do the things we do. But then in terms of learning technology and tools, it's a very dynamic space. But at this point, Ethereum is the biggest programmable blockchain. I know Bitcoin is bigger, but for a Turing complete development environment, that would be Ethereum. There are others as well. That's a place to get in. But another way to get in is also to read about all the applications. You heard Mark and Paul talk about a whole bunch of things in industry. Read some of the case history of them and get a sense of what's possible. So I'm going to leave that at this point. And what I'd like to do is a quick wrap up of what I think we've heard. And then, panelists might quickly in a word or two. Sorry, that's all we got time for, correct me. But I hope what we've seen here for those of you coming from various enterprises is that there's a lot going on. And if you don't have a strategy in this space, it's very much time to take a look and see where you ought to be going. And I think you've also seen that there are a number of different paths you can go. Certainly was the exchange between Mark and Paul, which I hope you found a bit entertaining, if nothing else. And that just shows there's different ways of thinking about this. Not a right or wrong, but things to evaluate. And then, Antonio showed, I have a third way in between. And Liz showed us that if you're starting something new, it's not just a matter of taking things we do now and doing it better with blockchain. You can do things we couldn't even imagine thinking about doing before and do them with blockchain. And that's an area of creativity that I think is an important takeaway. So literally 2 or 3 words if you've got a comment, otherwise we'll be immediately wrapping.
I'll go first.
Okay, Liz, yeah.
Yeah, I think a quick takeaway when you're examining, where do you start? It's just like any other industry. Is it enterprise? Is it finance? Is it startup hustle? It's really not that different within Web3. So I'd say do what Professor Korth just mentioned, just understand the general landscape and then maybe focus a little bit to dig deeper. And thank you.
Great. Okay, with that, I think it's really time for me for some thanks in conclusion. First of all, huge thanks to the attendees here. Love the questions. And even for those of you with no question, really appreciate you being here. I'd like to thank our panelists. I see Paul is no longer listening. I'll have to thank him separately. But all of you have been wonderful. Great insights, doing cool stuff. And I trust that none of you would mind some follow-up questions from attendees here. And that contact information will be available. And if you need a path to get it, just go ping me with questions. You can find me on LinkedIn, either by name or under Lehigh Blockchain. And finally, huge thanks to the Computing Research Association, and in particular to Helen Wright, who orchestrated all the logistics, made this possible, and you know, the whole Zoom thing worked really nicely for us, and you know, Helen set it up. So thanks a lot, Helen. Any last words, Helen, before we sign off?
No, thank you, Hank, for putting this together. And if anyone is interested in other events that we are doing, please look at our website. You can find the event page for this event, and you'll see all the speakers, and they're linked to their LinkedIn, so you can contact them that way. But the recording of this will be up on there as well. So please keep an eye out, and hope to see it at something else coming up. Thanks.
Okay, thanks.
Great.
Thank you. Thank you for
Thanks,
having me.
everyone.
Thank
Bye-bye.
Thank you, everyone. Bye-bye.